The market showed some resilience this week, rebounding from several down weeks in a row. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, November 7th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos so you can know how the market is impacting your option as a home seller or buyer. Starting off, let's look at how the market performed this past week. Inventory reduced significantly this week, with the average asking price staying about the same at $1,830,000, down from $1,884,000 last week. But here's the big number. We're down 6 homes this week. 8 homes went pending, 2 more than last week, which is good. Pending price did drop a little bit. We were at $1,906,000 last week. The average asking price for those pending homes is now at just under $1,008,000 this week. And 10 homes sold this week, 2 more than last week. And again, here we go, just under 1.8 for the average closing price, down from the $1,959,000 strong price that we had last week. So now that we know how the market performed last week, we can look at the broader trends that help us determine where the market might be heading. But before I do that, if you find this information helpful, why don't you hit the subscribe button down below? And while you're down there, hit the share button too and give it to a friend. That way they know how their market is affecting them. Everyone deserves to have that knowledge. All right, let's take a closer look at those broader indicators. Inventory came back down this week, which is a good sign for the fall market. The previous few weeks, inventory's growth had been a bit alarming. So seeing it come back down now is a good sign. It's nice to see the market behaving more the way we expect it to, especially as we move into the slower part of the year. With the drop of inventory being driven by an increase in pending sales and not just homes coming off the market and choosing not to sell anymore, this week we're seeing some improvement in the turnover rate as well. Not a significant improvement, but just a little uptick. We are back above 50%, above this line here, which is a good sign, but we're still well below 100%. So the improvement is a welcome adjustment to the sluggish rates we have been experiencing lately, but still not a great turnover rate. Sticking with the positive trends though, our over-under number improved this week as well. It came back to within that 2% margin of error that I talk about, that I consider a neutral market indicator. Homes are now closing on average about 1.6% below asking, much improved from the 2.6% below asking we had last week. And another indicator that saw a positive movement this week is the average sales price. The closing price, you can see here, had a significant movement up. You know, it was hugging that 1.6 line for a little bit. Now we're above 1.7 and creeping closer to that 1.8 number. The closing price increased by nearly $75,000 this week. This is an improvement we had been expecting since the past few weeks of pending sales have been averaging higher asking prices. So it's nice to see the numbers start to reflect that. This week brought us closer to my prediction of having the average sales price land in that mid 1.8 range by the end of the year. While all the lagging indicators showed positive signs of growth this week, the 2 predictive indicators actually took minor steps back. The QQQ fund dropped more than 2% this week. This line is a little tough to see for some reason this week, but we had a significant improvement from 2 weeks ago to last week, coming back down here. That was after the fund had a significant growth, like I said, about 5%. I expect that 2% drop off is more of a settling back down from the overreaction the fund had last week after the China tariffs situation looked like they were going to be reduced significantly. I'll be surprised if this fund continues to weaken over the next week or two. And the other more predictive trend or indicator is interest rates, and those also moved in the wrong direction, but just nominally. They increased by 5 basis points, just as they were threatening to get below that 6%, which I don't have a clear line here, but it'd be right here. And it was, trending that way until it flattened out and came back up a little bit. I don't know why it doesn't show an uptick on the graph line, but we're up 5 basis points this week. So just as they were threatening to dip below 6% by the end of the year, they redirected a little bit. The higher interest rates continue to be the main issue keeping our market soft. So all in all, this week showed some resilience in the market after a few down weeks. It was a little bit of a catch your breath kind of week. All the lagging indicators had a small bounce back from the previous few weeks, but they're still performing under neutral market levels, so not taken off incredibly. The two more predictive indicators had an inverse week from the lagging indicators, so I'm not expecting this week's positive momentum to turn into anything substantial moving forward. All in all, I'm just happy to have a week where the regression that we had been experiencing over the past month or so has finally stopped. Thanks for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification so you can stay informed on how the market shapes up as we end out the year. And if you want any help navigating the stressful or confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend. I'll see you next week with a new update.